Okay, so we're going to cover chapter 3, problem 1. So I'm going to do that, and you're going to do a different one for homework. So Gordon Temper is a single taxpayer who operates a food truck specializing in South African food. The name of his business is Mobile Peri Peri, and although the truck moves around quite a bit, he generally parks it in an office park and maintains an office and supply of inventory. The business address is below. Gordon's food truck is fairly new, so he also works part-time as a cook at a steakhouse restaurant. So here's his W-2. He gave you the following report on the Mobile Peri Peri. Revenues, cost of goods sold, truck rental, office rental, advertising, insurance, food license, uniforms, dues, travels, and miscellaneous expenses. Looks like he has a loss, by the way. Mobile Peri Peri uses the cash method of accounting and the cost method to value inventory. The detail of the inventory shows a beginning balance of 5,547, purchases of 43,132, and ending inventory of 5,077. Gordon provided transportation log. He drove over 5,600 miles on the truck. He also logged a total of 6,800 miles on his personal car. From the Mobile Peri Peri office to his second job. He did not provide mileage on his commute, right, from work. Dues are for a subscription to a monthly trade magazine. His travel expenses for a trip to Steamboat for a one-day seminar on South African cuisine. He spent the day at the seminar and then went skiing for 2 days and returned. His airfare was $405. His lodging per night is $300 for the 3 nights. His meals cost $100 per day. Uniforms are white chef coats with pastry hats. Gordon is divorced. His ex-spouse in 2017. His ex-spouse pays him $300 per month in alimony. She has custody of their 5 children. One of them, of Ramsey's children, Buffy, 17, lived with Gordon for 5 months, and he estimates he provided more than half the support. She had a part-time job at Taco Shell and made $5,600. Gordon also received a sizable settlement as part of his divorce. He received a 1099 for the following: interest income, qualified dividends. Required, complete Gordon's tax return. Okay, so let's talk about what we're going to do. So the first thing I do with a Schedule C, if they give me paper items, is I'm going to put this in Excel. So I'm going to move this over here because that way I can make sure that I'm getting to the right answer on this tax return, right? Because sometimes I'm not getting to the right answer on the tax return, or I might not know I'm not getting to the right answer. So I'm going to make this bigger, and I'm going to call this Mobile Peri Peri. And I'm going to do 2025. So we have revenues, right? So financial statement. He has revenues, 81,834.54. I'm going to make this all dollar signs, right? Okay. And then we have cost of goods sold. So 43,602.12. 43,602.12. I'm going to go over here and do a cost of goods sold, also called COGS, calculation. Let's see, because they gave us, so we have beginning inventory. They gave us in the problem 5,547, right? Okay. Plus purchases, so to get to the cost of goods sold, which is 43,132 in the problem. Just make this. Less ending inventory minus 5,077 equals cost of goods sold, also known as COGS. So I'm going to add this up, equals sum So they did give you the correct cost of goods sold here. This information we'll need to enter into the tax software as well. So I put it over here. So then we have expenses. We'll get to gross revenue, gross profit, which is revenues minus cost of goods sold. So right now he's got a gross profit of $38,232. Then we're going to have his expenses. All right. He's got a truck rental, $24,000. He's got office rental, $8,600. Advertising, $989.12, right? He's got insurance, $3,470.21. Food license, $500. Uniforms, $98.61. Dues, $100. Travel, $1,605.39. And he has miscellaneous expense. Total expenses, we're going to add this up, equals sum, right? And then we're going to have net income, which is gross profit minus total expenses, which equals what the book had. So we're putting it all here. But we also know that Gordon had some personal part to this travel. So we need to figure out what his actual travel expenses are. So it says that he had 3 nights in the hotel, but only 1 night related to the, I'm going to go over here and I'm going to do actual business travel. Okay, so 1 night in a hotel, which is $300, right? And he gets travel meals, which is 50%, right? Equals 100 times 50%, 0.5 for the day. Because he spent 2 of the 3 days on the ski trip, he cannot deduct the airfare. So total business travel is $350. So total business travel. So this is going in meals and this is going in travel. All right, so adjustments on taxes. So I'm going to add back travel. So I'm going to take this and I'm going to add that back, right? And then less business travel. I'm going to only subtract the business travel, which is 300, less business meals. And we're also going to have some adjustments to the vehicle situation. So let's see about that. Gordon rents his truck and therefore he will not be able to take depreciation on that because he's renting it. So we're just going to take the rental cost. He did not keep track of his mileage, so he'll be unable to deduct any business mileage because he wasn't really tracking it appropriately. All right, so I think we're not going to have any of that. So then I'm going to adjustments on taxes. So then I'm going to get to a net income on taxes. So let's see if so I'm going to take the net income. We're going to add back this, and this. And so because certain things are not deductible on the taxes, our net income on the tax return compared to the financial statements is $354.50. Okay. So I'm going to save this and also put this solution. Tax returns. Schedule C, Gordon, Chapter 3, Problem 1. All right. So I'm going to save that. I'm going to move that over here. And we are going to create a tax return for Gordon. All right. So we're going to create a tax return for Gordon. What's his last name? Temper. So I don't believe they had Gordon Temper last year, so I'm going to add a new client. So Gordon Temper, his date of birth, July 1, 1988. His social. All right. We're going to add his address. So it's going to search for an address, by the way, because it's connected. $3D. And this is in Laramie, Wyoming. 82070. It won't ever find these addresses. I think they're made up, but all right. 2025, we have Gordon. All right, we're going to go to input and we're going to enter his information. He's a full year resident. He is single. We entered his address already. So all of that is fine. I'm going to start with this income that we do know how to put in, this W-2, and they won't find that there, of course. Tender, because these are made up companies. Loin of Laramie. We're going to add the street address of his company. Laramie, Wyoming. Okay, so his wages, 23500, 2000. He doesn't have a retirement plan. Wyoming doesn't have income tax. All right. So now that we've added his W-2, we're going to go to Business Income Schedule C. Okay, so his principal business is a food truck. What is his principal business code? Food services. I would call it specialty food services personally, 77223, and it tells you that in the problem. And what's his business name? So this is where we're going to name it what he named it. Mobile Perry. His address, the business address is 150 Erie Street, Laramie, Wyoming. Right. And his zip code is 82070. All right. He doesn't have an employer ID. So he is using the cash method. His inventory is the cost method, they told us. All right. If you required 1099, so he didn't pay any contractors. So we're going to put 3 here. Okay. All right. We don't need to answer any of these. So once we've filled this out, we're going to go to the income statement up here. So as I personally work through things, I highlight. Okay, I'm going to put the income in and then I highlight it. This is just my personal method. So I know I've put this into the tax software, especially when someone has, and I'm rounding, by the way, right? Okay. And this is where I said we have to put in beginning inventory. So beginning inventory, purchases, inventory at the end of the year. So it should calculate cost of goods sold for us. So I'm going to highlight this and then I put all of this in. All right. Then he has advertising. So some of these don't have spots. So as long as you put them in a relevant, like we might have stuff in a different spot on a Schedule C, and that's okay as long as we get to the same number. So advertising he has, right? Okay, what else does he have? He has subscription and dues, $100. He has insurance. Okay, insurance. Other than health insurance, 3470. He has rent of machinery and equipment. So this would be the truck rental, and then the office rental is in other. So we've done those two. He has licenses, other. So other, I'm going to put license, food license. If you didn't end up putting it here when you do the homework, it's okay as long as you get it in here. So we got the food license. All right, we have travel is 300. So on the meals, you have to put the full amount, which is $100. So it'll take the 50%. All right, so we got the travel here. There's a uniforms line here, 199, I'm rounding. And then his other expense, miscellaneous, 379. Okay. All right. Okay, so this is the whole scenario. I am actually going to hit check return so I can look at what the Schedule C looks like and see if I come out with the right number. So I'm going to check my return and I'm going to go to Schedule C. So let's, Gordon Temper, he has a food truck. This is his social. He doesn't have an employer ID. This is his business code. This is the name of his business, the address. You should have cash checked off. Yes, he materially participates, which is an automatic unless you check no. He didn't have any subcontractors, so no 1099s. All right. So 989 was advertising, insurance, rent of machinery and equipment, rent of the office, taxes and licenses, travel, meals. We put in 100, it takes 50%. And then other expenses, which is the total of the miscellaneous, and I believe uniforms is down there, etc., right? Also down here, so we did come up with, that's why I try to make sure I know, all right, we are good to go. This is the actual number I came up with on the taxes, right? If I didn't, I'd start looking at why. And then this is where we have beginning inventory, purchases, less ending inventory, and cost of goods sold came out here. And that's how we get to this number, gross profit. So I'm double checking that number, which is correct. So we have all of this. And then the miscellaneous other, it has dues and subscriptions down here, miscellaneous and uniforms. It automatically puts it down there based on where we put it in the tax software. So the Schedule C looks good. We are not done with the return. I just wanted to make sure I'm good with the Schedule C. So now I'm going to go back to return input. I'm going to save my work on the tax software here and this. And then Gordon had some other scenarios. He is collecting alimony, right, from a 2017 divorce. So pre-2018, 300 per month. Calculator, 300 per month times 12 months, right? So $3,600. So I'm going to go back up here and go to the alimony miscellaneous other. So alimony and other. There's an alimony tab. Social Security benefits, alimony and other. Alimony paid. You have to click here. So alimony received is $3,600. The date of his divorce, it doesn't say, but we're just going to do 03/01/2017. We would ask them. And it wasn't a pre-2019 non-taxable agreement, so he has to pay tax on this alimony. All right. Let's see what else we have on his tax return. He has investment bonds. So he has a 1099 INT. So I'm going to go to the interest income, hit details, the name of the payer, investment, bond, fund. All right. And it's box 1. He has interest income. 3202 is what he has there. He also, from the investment bond fund, has a 1099 div. So I'm going to go to 1099 div. I think this saves automatically. All right. 1099 div, and I'm going to hit details. And so the name of the payer is investment bond fund. They do give an EIN for this. 4213134445. Okay. His total ordinary dividends. His total qualified dividends from the form, and his total capital gains distributions. And he doesn't have anything else on there. So I am going to go to my check return button. And just remember, I type taxes all the time, so it will take you longer to do this. Okay, so let's look at his tax return. We have a 1040. He has wages. He has taxable interest, qualified and dividends. This is where his capital gains on a Schedule D is checked. He has additional income. This is we'll look at Schedule 1, his additional income. So he has $3,600 from the divorce, and then his Schedule C total net loss flows through here. So we're going to go back here. That looks correct to me. He's taking the standard deduction, and his total tax is $1,493, and he paid in $2,000, so he is getting a refund of $507. And we can see the Schedule B is filled out because he has interest dividends. We would have to ask him if he has any foreign bank accounts because he might have FinCEN requirements. And this is his food truck. And the 8995 QBI we will talk about, but it's filled out, but he has 0 because he doesn't have any income from the business. But we will talk about this in a later chapter. All right. I am going to hit File, Return, and download this PDF. And I will post this in Moodle for you.